Aloha, everyone, and welcome to Java. It's Monday, so hopefully everybody had a wonderful weekend. This is September 25th, 2023. Thank you all for joining me. I want to get right into this because there's quite a bit that has happened with our favorite risk indicator, the MMRI, showing that we are less than 5 points from extreme risk in this market. So last Friday did stop in the red, did finish up in the red. Looks like we are going to probably continue that trend. Got a very bearish outlook, although it would not surprise me if there was a bit of a bullish consolidation or even a bit of a bump for today. Nothing goes straight in one direction, although the overall trend is generally to the downside. Not financial advice, but we are watching the volatility index increase. And we've got the elements, the 10-year yield almost at 4.5. And we've got the dollar index as well with the strength, which is very bearish for stocks. So we'll keep an eye on that today. So I want to move forward. In the inflation front for oil, we've got the French President Macron saying that he is going to ask the oil industry to sell fuels at cost. I don't know what he's thinking, but he wants them to not make money, deliver for free after all of the taxes and issues that they basically said they were making money off of them, which is what they're for. They're corporations. So anyway, we've got the other story, and this is kind of a propaganda. This is from the United States side, saying oil prices have risen, which is a given, saying that's making gas more expensive for US drivers and helping Russia's war. Well, if we didn't get ourselves into this situation, it wouldn't be this way because the United States has the ability and the resources to produce enough that they consume. They also had large reserves, and we just kind of burned through those. So, they're making this sound like if you're in the United States and you're driving your car, you're helping Russia, and that's terribly unpatriotic of you. So, I don't know what you're thinking. Stop driving. So, the other story they've got is that a slow thaw in frozen US Iran relations has led to booming oil exports. And that is directly not the truth. So, Iran does not like us, which is what this makes it sound like. And the quote unquote exports are seized shipments that the United States has been making, that they have allowed and dropped sanctions or not been really enforcing on Iran as they make their oil trek to China. So they are continuing to kind of turn a blind eye, and every once in a while they're taking part of the oil cargo, and that's kind of pretty well known. So anyway, the truth behind that one. So I guess there's a big thing going on around TikTok right now about the Roman Empire, and if anyone is familiar with it. So a friend of mine, we were discussing this before the TikTok thing, but we are in what we call a bread and circuses environment. And what happened during the fall of the Roman Empire is people were getting very restless. What they ended up doing was creating games, gladiator games, and they would also feed them. They had free food for them so that they would not revolt. And we're kind of in a very similar situation nowadays to where they're giving the handouts and they're trying to keep people wrapped up in whether it's Taylor Swift or football games or something of the sort. But sentiment is souring rapidly. And I want to move forward with that. So we've got the potential US government shutdown looming that would start October 1st. So they kind of got a couple of agreements on, but nothing solid yet. So that could kind of shake markets a bit if they don't come to terms. We do have the 10-year Treasury yield, as we were talking about, rising. That is bearish for the markets because it makes them very shaky, and the markets want reassurance right now. So across with Bank of Japan, we are watching the yen sink, the Japanese yen sink to a 10-month low because they basically say they need easy policy and they will need to they're going to open the printing machines or adjust their rates as necessary. And so their currency is taking a hit. And as we know, I've kind of brought this up before, you kind of have to make the choice. You're going to have to either sacrifice a currency or sacrifice your economy because you can't have both when they get to a point of breaking. We're very near that in the United States. And I just saw this other story that I wanted to bring up because we were talking about between food and the exports. China's rice exports to the Ivory Coast have hit a record high because India banned all rice exports for a time. And so China and Thailand picked up on that. So those countries are doing very well because they're rice and food exports, and Russia is doing well over the oil. So moving back to the United States with the jobs, credit, and inflation, we've been kind of following with the credit card losses in this first one. It's rising at the fastest pace since the last financial crisis. And they're talking about credit card losses now are at an all-time high. So, and this is going to get worse because we've got the student debt repayments are due this next month. And with this one, I don't know who they asked, but it says 9 in 10 with student debt are worried that they can't meet their expenses starting next week. And they're saying retailers look out, which is appropriate because discretionary spending will be the first to be cut. But after that is also with the credit cards because they're not backed with anything, unlike auto loans, which they would need to get to work. So they're going to start dumping their credit cards and not caring about their credit. So moving forward, we've got a little bit of an update on the rising mortgage rates. And then we've also got a supply increase will crush new home sales. So existing home sales, we could have a supply glut coming onto the market because with the push to go back to work in the office, there are many people that basically took remote work during the pandemic. And so they purchased homes that were farther out of the city, much more remote. And now with the requirement to return to the office, they'll either have to give up their work or sell their house, take a loss on it, and move back closer to wherever their work is. So we could watch between that and the Airbnbs. This could create a glut in the housing market. So if you don't mind, if you would hit that like button, I would appreciate it. It helps tremendously with the algorithms and gets this out there to those that would be interested in the material. Thank you so much. Okay, and with that, I've got a couple of stories that I wanted to bring up. We were talking about France and the coups happening in Africa right now. The main one that started was in Niger. And so now we've got France saying in their story that they're going to withdraw their troops by the end of the year. But the story they're spinning is that they're ending their military cooperation with the authorities of Niger because they no longer want to fight against terrorism. So, you can read between the lines in this. Basically, they give Macron a bloody lip and told France, go home, they're done with their colonialism, and with them uh, basically uh, utilizing they've got their children, mining in mines for their gold and making use of their resources, and they're kind of done with that. So the people have revolted and the people have won. And I've got a couple of last stories. So Amazon, this is kind of a market one also. They're investing as much as $4 billion in an artificial intelligence startup company called Anthropic. So if you aren't aware, Amazon has also invested in AWS. It's their Amazon Web Services. And that is increased storage capacity for data. And they're one of the largest ones running this. So it's between them and basically Google running their artificial intelligence programs now and mining data of basically our information. So this is their move to compete. But before you go dumping your money into Amazon, they are also having the Federal Trade Commission may file an antitrust suit against them because they basically compiled so much power again that they're looking to break them up again. And one of the main complaints is that Amazon has enrolled customers in their Prime program without their consent and then made it difficult for them to cancel. So that's the grounds for that. And I've got one more story to kind of counter this one that I would like to bring up. And it's an ex-Google employee that has launched an open-sourced artificial intelligence protocol to challenge these tech giants. And so basically, this is kind of for the common people. When you open source means that anyone can get into the program and do their part. And I know in my mind, there's two sides to this. However, they have opened it up to where regular people can get into this programming. And I've got a good friend, Mario. This is out for you in case you're watching this, because I know you always call them grommets, or the little programmers that work down in their basements. So as you say, but a lot of them are open for basically common people, for us. We've got people working on our side. So I just want to give you this as a light at the end of the tunnel. Don't feel like this is the end of it, because even artificial intelligence, it's all about who's behind it, programming it. So with that, I wish you all a green trading day, or just a wonderful day in general. And as always, my friends, until I see you again, stay free.